Well, hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, January 26th of 2021, and we're going to talk about the headlines of the day for the week, if you will, what Wall Street is paying attention to, what really matters, and what we should be watching as we navigate our clients' portfolios going forward. So let's get right to the topics of the day. Thanks for watching. So the most important thing right now for the next few weeks, we're in earnings season. So you have to look at the U.S. equity markets by way of the S&P 500. We do in the industry, and we look at valuations. Is the current price of the equity market, the stock market, overvalued? And by a lot of measures and metrics, the answer is yes, okay? So the price to earnings ratio is what we look at, the price of the equity market relative to the earnings, or the price of the stock over the earnings, as you will, for that respective company that we analyze, and we decide if it's a time to buy or time to sell. Well, let's look at the S&P 500 in total, and I drew this for us to take a look at as it relates to where we are. Today we have a forward PE of just over 22 on a price to earnings ratio and a forward PE. Historically speaking, if you take a look, the purple line here is the S&P 500 through the years, the last 20 years. Going back to 1999, right, we had the internet bubble relative to the 25-year average on the S&P 500 standard deviation is a 16 on a forward PE. A standard deviation plus 1 is a 19. A standard deviation minus 1 is a negative is a 13. So you could see as the market price of the S&P 500 bounces around through the course of time. Obviously, we've had some recessions, some booms, some economic busts, bear markets, everything in between, a lot of uncertainty. Okay, now we're breaking out to the upside. Now, what really has to take place are earnings. Earnings have to catch up to this number right here. So the P, the price of the S&P 500, is really priced to perfection in a lot of cases in a lot of these stocks. So what has to happen? For this to normalize and to actually get back to at least one standard deviation or close to the average. I don't think we're going to get to the 25-year average anytime soon, but at least closer to the 19 under the 20 forward PE. It's really critical for earnings to come in stronger than has been forecasted or expected. So we should be looking for to keep equity valuations where they are, or prices where they are, because markets are all-time highs, including the Dow and the S&P and the NASDAQ. So for those indices to stay where they are, we need earnings revisions up. So most important thing is to pay attention to the earnings calls. Let's see what the big tech companies do. Let's see what all the other companies as they report earnings in the next 3 or 4 weeks and even months ahead. So that's going to be really critical to see if we do. That's called multiple expansion. If earnings are upward surprise, which we believe will be the case, that means then the price to earnings ratio will normalize on a forward PE basis. So the earnings are there to support where we are from a valuation standpoint. Again, Blanke Schein Wealth Management, we believe a combination of both is going to happen. You're going to have some winners, you're going to have some losers, ultimately, and that's what really makes markets, right? Some are going to be overshooting and over-promising, under-delivering, and vice versa. So we're going to see a lot of shakeout in the next weeks and months ahead. So we're going to see increased volatility as well as we make sense of earnings being reported. So let's keep an eye on the earnings that are being reported, what corporate CEOs and CFOs are giving in terms of guidance, as well as hopefully we see some upward surprises to support our valuations at this time. Now, that being said, anything that we see on a go-forward basis, we believe at Blanke Schein Wealth Management is a buyable opportunity on some certain sectors, some certain stocks. So we're looking forward to the market cooling off a little bit, taking advantage of the volatility, which is soon to be taking place potentially right around all-time highs in terms of prices. And then once prices come in, we look for quality. We're adding to value in some international stocks and basically doing a rebalancing, if you will. Why is that the case? Well, the Federal Reserve has a 2-day meeting concluding tomorrow, and essentially they're going to reassure at least that's what we're looking for, is that guidance from the Federal Reserve for the reassurance that they're going to be fully committed to get the U.S. economy and all sectors of the U.S. economy, including unemployment, as well as small business and travel and the entertainment industries, back on their feet. We believe that's the case. We also believe that Congress, right, fiscal and monetary policy, will be working together to get another stimulus package out. More targeted in nature, we're hearing a $1.9 trillion number actually being floated. Again, this is where the sausage making happens. As I said at home to our friends that are watching, don't hold your breath on this. I think the earliest we'll see another round of stimulus in terms of Congress agreeing as to their wish list and pet projects actually get in the congressional sort of bill, if you will, when it's finalized, is going to be probably mid-March, late March, is my personal guess. Markets might be looking at earlier than later, but I wouldn't hold your breath on that one. But we have the Federal Reserve is going to really be big tomorrow as they go conclude the two-day meeting and see what they actually say and see if they're going to reassure the markets that they will be the backstop. So finally, great economic news again on the real estate front. I keep bringing up the real estate side of things, especially residential, as it relates to, it's a huge pillar of the U.S. economy. And again, confidence is needed from a consumer standpoint to actually make one of the largest, if not the largest, single purchase that a consumer would make in their life history of sort of their financial life. So it's a big economic bullish indicator for the U.S. economy. So we pay attention to it. In November's Case-Shiller Index just showed another rise of 9.5% for home prices. It's just incredible, outstanding. And actually what they did also report was just a 2-month supply of homes on the market. And all 20 city composites show collectively a 9.5 year-over-year gain, up 8% from the previous month. And ultimately, the cities that are hot are Phoenix and Seattle and San Diego. And all 19 cities reported higher prices. And it's just continuing to see this trend accelerate. One of the biggest things that I hear, at least from my wife, who is a real estate agent, is because of short supply, it's not so hard to sell your house right now. The biggest challenge is identifying a property once you sell your house, of being able to acquire and then get another property for you to actually sell this one and buy that one. So you kind of have to think that through if you're in the real estate market. Ultimately, because even though it's a hot market, where are you going to go, right? So we're going to keep an eye on the fundamentals of the real estate market as it relates to the U.S. consumer, because 2/3 of the U.S. economy, which is our GDP, gross domestic product, are driven by the U.S. consumer. So that's very important. We keep an eye on that as it relates to investments and portfolio management at Blanke Schein Wealth Management. And again, our economy in the U.S. is strong. And then outside the U.S., just to give you a global update, we look at the PMI, and all 7 of the largest sort of economies of the world, including China as well, are above the 50 level of the PMI number. So that means they're in expansionary mode. Why that's important? Because the rest of the world is ahead of the U.S. in the coronavirus, right? They got it first, they spread it first, they're recovering first. We want to make certain that their economy is also recovering, and we don't want false positives as we get out of this, ultimately going forward. So there is a sign. What markets are paying attention to in the U.S. and what we're paying attention to, it's also explaining why markets are up on a daily basis. It's not just reading the headlines of the day and following the news. God forbid you follow the news, because it's very scary out there. Markets are paying attention to real economic growth by way of what we see in the real estate market, by way of what we see in the equity markets and corporations and earnings, as well as the PMI data that's coming in outside the United States, because they're ahead of us on this, and there's real pent-up demand and real growth that's out there. So that's what we're paying attention to here at Blanke Schein Wealth Management as we navigate the markets going forward. So thanks for watching. Again, like and subscribe and tell a friend, and be sure to tune in next time. Take care. Have a great day.